The Schwab US Dividend Equity ETF, or SCHD, has been officially rebalanced for 2024, and due to the annual reconstitution, there are now a ton of brand new positions that are within this ETF. But one of the things that are very, very important to holders of SCHD is, of course, what the future dividend is going to look like for this ETF and how safe or not safe the dividend is going to be. In this video, we're going to analyze all the positions that are no longer a part of SCHD and all the brand new positions and see just how safe their dividends and other important metrics might be. So I promise you, whether you hold 1 share of SCHD or 1,000 shares, you are going to want to stick around till the end. Drop a like down below and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first of all, in case you had missed it, these are the new positions that are now inside of SCHD, and these are the old positions that are no longer a part of it. Now, real briefly going through them, we now have BMY is now part of SCHD, HSY, Hershey Foods is also, CINF is also part of it, SWKS, CF, DKS, we have TPR, we have EWBC, we have APA, DINO, CHRW, we have MTN, we have NXST, COLB. Also part of SCHD now is NSP, we have LKFN, VRTS, OXM, HTLF, AMSF, GABC, PFBC, and lastly, FBMS. Now, as far as all the positions that are no longer a part of SCHD, as of right now, unfortunately, ABGO is no longer a part of it, MRK is gone, ADP is gone, BXITW, we have 3M no longer a part of it, Allstate, Newmont, Williams-Sonoma, NRTS, we have TSN gone, NRG, KIP, FAF, PARA, AAP, LAZ, AGM, STC, RGC, EBF, and HAFC is no longer a part of the ETF. Now, it's of course no secret that the fact that there's now tons of new positions within the index that SCHD follows and tons of positions that are no longer part of it. Things are going to change a little bit around here. Now, SCHD has been known for dividend growth and for a consistent, stable dividend, which is why investors like myself have been loading up on shares of it for years now. But like I sort of mentioned towards the beginning of this video, I want to go through and look at all the stocks that have been eliminated from SCHD and all the brand new ones and sort of give an idea on how safe some of the dividends are and go over some other very, very important metrics. So this right here on the right hand side, these are stocks that have been eliminated from SCHD. We just sort of went through the group. And just glancing at some of the names that have been removed from SCHD, we have things like Advanced Auto Parts, which has a D as far as growth, D as far as yield, and an F as far as consistency. So sort of good riddance from there. But then we have things like ADP, which made up 3% of the ETF, which had ABA across the board. Now, for the most part, it's sort of a mixed bag on whether or not a lot of the names that SCHD got rid of are good stocks to cut away or not. But certain names like Broadcom, of course, which has an A+ as far as growth, which we obviously all know how much Broadcom has grown over time. And this is probably the #1 stock I see SCHD investors very, very sad seeing to leave. Broadcom also had a B- yield and B+ consistency. But there were some names that were a little bit rougher on the edges. We have things like NRG, which was D+ growth, D- growth from Northern Trust, D+ growth from Paramount. Instaroom has a D- on growth. Now, as far as yield goes, for the stocks that are no longer a part of the ETF, there are a bunch of names in here that did offer A or B yield. So that's something to be wary about when it comes to looking at SCHD's yield moving forward. And as far as consistency goes, all the names in here were pretty consistent. There's only one F as far as consistency goes, and it should go without saying, but take this all with a grain of salt. This is just measurements from a quantitative algorithm. Now, this is the exciting part. As far as all the new names that are now a part of the ETF, we have things like BMY, which a lot of investors are pretty excited about and optimistic about. BMY has a B+ as far as safety, A- as far as growth, A+ as far as yield, and A as far as consistency. The yield trailing 12 month for BMY, for just one example, is 4.41%. There's a ton of consecutive years of dividend payouts, and the payout ratio is relatively low. Even things like Hershey, we have A's across the board, other than yield, because the yield is 2.47%, so not the highest yield across the entire list. Now, just glancing at consecutive years as one metric, you can see that there's a ton of names, a ton of brand new names within SCHD that have been paying dividends for a very long time. And of course, if a stock wants to even get into the underlying index that SCHD tracks, the Dow Jones US Dividend 100 Index, they do have to pass vigorous screening, so it's not like there's going to be any junk stock names that are really going to get through, unless of course, I guess they got lucky. But as far as consecutive years, there's a good amount of historical data that we can go off here, and it looks like overall on the list, there's a few names that have a 1 year, but majority of them are pretty good. Now, as far as payout ratio goes, there's one payout ratio. It looks like MTN, which has a well above 100% payout ratio. But other than that, the payout ratios are also pretty much at bay. Now, as far as yield forward goes, there's a lot of yields somewhere around the 2 or 3%, which is sort of normal when it comes to SCHD. But there are a few bigger ones like the 7.9% yield from COLB. There's also the bigger yield from BMY, but other than that, there's a lot of yields that have a 2 in front of them. Now, as far as dividend safety goes, throughout this entire list of the brand new stocks that are now a part of SCHD or the underlying index, there are a few D pluses and Ds as far as dividend safety goes. Now, this is of course worrisome because if you consider yourself a dividend growth investor, the last thing you want is to have any stock within an ETF that you own and hold to cut their dividend or anything of the sorts. And although there's not that many names, there is OXM, which has a D+, MTN, which has a D+, there's a D for TRP, and a D+ for DKS. Other than that, there are a ton of A's in here and B's, and again, like I said, take it with a grain of salt. Just because MTN, for example, has a D+, does not mean that they're going to cut their dividend necessarily today or tomorrow. But it is just important to realize that there is going to be a mixture of, let's say, super safe dividends in this list, and some that might not be as safe as others. Now, as far as growth goes for these new stocks that are now a part of the index and a part of SCHD, this is a big concern because, of course, we no longer have any exposure to Broadcom, AVGO, which was a growth rocket for SCHD. So it's going to be interesting to see which of these names, if any of them, really step up and really grow the portfolio overall and grow the ETF as far as ETF price long term. Because honestly, although most of these names probably should be fine and do yield anywhere from, let's say, 2 to 3 to 4%, which is what most of us dividend growth investors are looking for. If there's not any names in here that are really going to push the needle and grow, it really could stunt the growth potential for SCHD long term. Or at least, I guess, until the 2025 reconstitution. So I hope that gives you guys a little bit of an idea of what stocks were eliminated from SCHD and some of the important metrics to keep an eye on moving forward as far as things like growth potential or lack thereof, things like yield, things like dividend safety. And again, take all this information with a grain of salt, but it is just interesting to know and interesting to dig into, and interesting to look a little bit deeper under the hood and to see what these new stocks that are now a part of the holdings that you and I now own if you own shares of SCHD, just because honestly it's good to know. Now, last but not least, I do have to ask you the number one question I have for every single investor out there that owns shares of SCHD as of right now, out of all these names, out of all the brand new holdings within this index, out of all the brand new holdings that SCHD now has exposure to, things like BMY, HSY, etc. If you had to, for whatever reason, only buy one of these new stocks and hold it forever, which one of these brand new stocks would it be and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.